Hi, welcome to Slay the Spider. I'm Jim B, and I'm the creator and host of Slay the Spider. Shares of the S&P 500 are called S&P Depository Receipts, SPDRs. Spiders. Slay the Spider means I intend to beat the S&P 500 quite substantially. For the week ending March 11, 2022, the sector movement was mixed. In healthcare, biomedical, and drugs were unchanged. Healthcare advanced across to the bull side, then declined. In media communications, internet stocks declined, media communications declined, and telephones advanced. In technology, software was unchanged, semiconductors were unchanged, computers declined, and electronics advanced. In consumer discretionary, on the bull side, restaurants declined and crossed to the bear side. Leisure declined and crossed to the bear side. On the bear side, gaming declined, household products, autos, and retail declined. In the financials, banks declined. Real estate, savings and loans, and insurance were unchanged. Finance and Wall Street declined. In the industrials, on the bull side, metals advanced and steel declined. On the bear side, aero defense and chemicals declined. Building products and waste management advanced. Machinery tools were unchanged. In the others group, on the bull side, oil declined, precious metals advanced. On the bear side, gas utilities and electric utilities advanced across to the bull side. Oil services and transports advanced across to the bull side. Forest products, food, and business products declined. Protection and safety and textiles were unchanged. For the week ending March 11th, there were 11 mini sectors unchanged, 9 sectors advanced, 20 sectors declined. 2 sectors crossed to the bear side, 5 crossed to the bull side. There's now 11 sectors on the bull side and 29 on the bear side. For the week ending March 11th, 2022, the S&P 500 closed at 4,204, down 125 points or 2.8%. The Dow closed at 32,944, down 670 points for the week, or 1.99%. Nasdaq closed at 12,849, down 469 for the week, or 3.5%. Nasdaq and the S&P 500 have now been down 7 of the 10 weeks of 2022. The Dow's been down 9 of the 10 weeks. The S&P and Dow Jones are now both in a correction officially, down 12.7 and 8 and 10.8% respectively. Nasdaq entered official bear mode this week as it closed down 20.8% off its highs. We're not yet at a bottom. Quite frankly, I don't think we're halfway to the bottom yet. It's still far too early for bottom fishing. This week, 81 stocks went from buy signals to sell signals. There were 11 more stocks that were delisted or merged. There are now 32% of stocks on buy signals and 68% of stocks on sell signals. Overall, our market score changed from 23 to 21. For the first 10 weeks of 2022, the S&P 500 is down 12.4%, Nasdaq is down 19.6%. Energy is up 34.3% and far and away the best performing sector. All the other sectors are in negative territory. Healthcare is down 7.8%. Media communications is down 18.1%. Technology is down 18.7%. Consumer discretionary, or the worst performing sector, is down 19.8%. There's a 54% difference between the performance of energy and consumer discretionary stocks. Finance is down 5.6%, industrials are down 7.1%, and real estate stocks are down 12.0%. For the week, the S&P 500 was down 2.9%, and Nasdaq was down 3.5%. Energy was up 2.1% for the week. Energy is the best performing sector of the year by far. Healthcare was down 2.7%. Media communications was down 3.2%. Technology this week was down 3.8%. Consumer discretionary was down 2.8%. Financial stocks were down 2.2%. The industrials were down 2.5%. The real estate sector was down 1.7%. This is a 3-week chart of the 10-year Treasury bond yield. The past 2 weeks, the gaps were down, indicating a flight to safety due to the Russia and Ukraine situation. Now we're seeing rising fears of inflation and interest rate hikes beginning with the Fed meeting this coming Wednesday. Subscriptions are available for $12 a month on an annual contract or $15 a month on a month-to-month contract. I've been producing the Slay the Spider Circle since 1998 and using it to manage private client assets. I've been nearly completely out of stocks for the past year. My portfolio performance is now well ahead of the S&P 500 and Nasdaq indices since I went into cash. That's the total idea behind Slay the Spider. Outperform the indexes in both up and down markets. Now is an excellent example of cash beating the market substantially. I'm looking forward to buying many of the stocks I owned previously at prices well below what I sold them for last year. I will then own more shares going forward, in some cases twice as many. Sure, there were a few stocks I wish I had kept, but in total, I'm more than happy avoiding this bear market.